Good morning, everyone. Darius Dale here to present our macro minute for Thursday, January 27th, 2022. Starting with markets, we have stocks mixed this morning with the U.S. leading, commodities mixed, crypto up, dollar up, global bond yields mixed. Big movers this morning, we have Shanghai and China's benchmark Shanghai Composite Index down nearly 2% apiece. Our 30-year Treasury bond yield down 5 basis points. That's a pretty big move in the context of that exposure. On the economic front, the jagged edge of leading survey data continues to signal Omicron's impact upon the global economy is similar to its impact on the human body relative to its predecessor Delta, shorter and milder. That sets up the world for a transitory recovery in PMIs and the like starting in either February or March. So this overnight, we got the Bank of Korea's manufacturing business survey index ticked down to 90 in February. That's the lowest print we've seen in a couple of months. The non-manufacturing business survey index out of Korea there ticked up to 82 in February. That's the highest we've seen in a couple of months as well. Germany's GfK Consumer Confidence Index ticked up to minus 6.7 in February. That's the highest print we've seen since December as well. UK CBI Manufacturer Sales Index ticked up to 39 in January. That's the highest print we've seen in 2 months, November. And then the UK CBI Retailer Sales Index ticked up to 28 in January. That's the highest print we've seen in a couple of months as well. So not crashing. Things are holding up pretty well. We saw some slowing in December. We saw some slowing in January. That does set the world up for, again, a transitory bounce in high frequency economic data starting in February and or March to pick your country. With respect to today's probable range setups, overbought signal in the Bloomberg Dollar Index, the U.S. dollar versus the Swiss franc, U.S. dollar versus the Mexican peso, oversold signal in China's Shanghai Composite, good spot to be buying Chinese equities there, and the British pound. S&P 500, that's bearish fam, still minus 3% of downside versus 6.8% of upside in its probable range. WTI bullish fam still, VAMS is short for our volatility adjusted momentum signal. That WTI's got 7.2% of downside versus 4.4% of upside in our probable range. Bloomberg Dollar Index, taking it to the chart this morning. Bloomberg Dollar Index is put on a full deflation playbook with respect to the Fed's incremental and marginal tightening initiatives. Jay Powell threw a lot of cold water in terms of undoing a lot of the goodwill that the Fed statement provided in terms of chopping off the hawkish right tail of the forward policy outlook. And Jay Powell said, no, 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 no. He's that funny Mexican guy in the meme, just laughing at all of us, throwing cold water on the on risk assets in our hopium for a recovery. But again, dollars overbought here. It's obviously neutral VAM, so that's potentially signaling a move back to bullish VAMs. But ultimately, if we could get some speed out of this dollar move, this positive gamma, we could actually see risk ats and anything inversely correlated to dollar commodity stocks, cryptos generally could actually start to recover a little bit into the springtime. But again, the probability of those moves being big and lasting is certainly diminished at the margins relative to what we heard out of Powell yesterday afternoon. 10-year Treasury yield, minus 10 basis points of downside versus 17 basis points of upside. Still bullish VAMs there. Bitcoin minus 10% of downside versus 14% of upside. Still bearish VAMs there. Ethereum still bearish VAMs minus 10% of downside versus 26% of upside. Gold neutral VAMs minus 1.2% of downside versus 2.7% of upside. And then lastly, I got a good question from someone on Twitter. They were saying, hey, why should we subscribe to the off morning mode? Don't you go through everything in the macro minute? And I said, hey, look, the macro minute's a great complementary product, but I think the juxtaposition in terms of what we produce in our lead off morning note versus what you're getting in these programs in these macro minutes is very similar to if you've ever been to a nightclub. The macro minute is like being at the back of the line at the nightclub, hoping that you get in and hoping that there's some space in there. Whereas the leadoff morning note is pulling up to the front of the nightclub with a bunch of chicks or a bunch of guys if you're a girl, and greeting the bouncer, shaking the owner's hand and having them both escort you right to your premium VIP table right next to the DJ booth, so you can sort of infer what you need to infer from that juxtaposition. So for those of you, we'll catch you at the leadoff morning note when that's out this morning with all the actionable signals as it relates to your portfolios. Cheers.